In this video, I'll share with you 10 investments I avoid, and I will not promote to you even if I'm offered compensation. Before I dive in, if you're new to investing or want to get better at investing, you're in the right place. Here at Tykr, we're all about clear, confident investing. All right, number one, precious metals. Some people believe that precious metals are a hedge against inflation. Historically, most precious metals don't even keep up with the S&P 500. That's why I tell people, if you want to play it safe, just simply invest in the S&P 500. Now, for context, I have been approached by different precious metal companies. There is even one endorsed by a celebrity. I won't say that name, but they're willing to pay me a fee per ad or a monthly fee to promote their product. And I said to them, I can't, because precious metals don't even keep up with the market. Sure, I could make money, but it doesn't do any favors for you guys. In other words, it's not an ethical promotion on my part. Why would I promote something that's not going to make my customers any money? So I was like, nope, moving on. So I avoid and do not promote precious metals. All right, number two would be REITs, real estate investment trusts. I know some people, they love REITs. They love investing in real estate. And I have a lot of friends in real estate, but the people that make money in real estate usually are the ones investing in multifamily or syndicates. Multifamily being like, 4 units, 8 units or higher. Syndicates, that would be like a private investment in it would be like 100 units or 200 units or 500 units. Now, the benefit of investing in private real estate, not investing in the stock market, REITs in other words, private market is two big benefits. One is you're creating that ongoing cash flow, and two, if the property is sold, you have a big windfall event. In other words, you have a bunch of cash hitting your bank account. With REITs, similar to precious metals, they typically don't keep up with the S&P 500. I do not like them, and you don't get some of the added benefits of when you sell a big property, you get that big payday. With REITs, you typically don't. All right, number three, penny stock. So what is a penny stock? Any stock that is $5 or less, that's US dollars, is classified as a penny stock. And any stock that's between $5 and $10, I call it flirting with penny stock territory. Now, here's the deal. If any stock is $5 or less, again, US dollars, there's a 99.9% chance it will never break out past $5. The reason is the market cap is too small, and corporations, large financial corporations, they lose confidence and they lose interest. So they do not touch it. And then any stock between $5 and $10, there's a 90% chance the stock will never break out past 10. Same situation, institutions lose confidence and lose interest. So I see a lot of people out there looking for like that, 50-cent stock that'll go to like $5 or $50. That does not happen. In most cases, it does not happen. It's just the market cap is way too small. In Tykr, you can avoid that problem. There are 5 market cap categories. There's mega, large, mid, small, and micro. You want to avoid small and micro. Usually when you have a share price that's a lower dollar amount, it's going to fall into that small or micro level. So if you ever see a stock at that level, do not promote it. And in my case, when I'm promoted by people who want me to promote their stock, and I have been approached by these people to promote on our YouTube channel and promote to the audience, they'll pay me money to do that. No, I will not do that because that's a bad investment for you guys. I would not feel right doing that. That would be an unethical promotion on my part. All right, moving on to number 4, IPO stocks, initial public offering. So here's the deal. Just because you can doesn't mean you should. There are businesses out there that run out of ways to raise funds. It could be from a bank or from venture capitalists or private equity. Whatever it is, they run out of ways to raise money. So what they do is they go public and they raise money from retail investors like you and I. Unfortunately, most retail investors don't know the difference between a good and bad stock. So they typically invest in the IPO stock and they lose money. Here's what we recommend, and you see this in our Tykr onboarding, which is try to wait 4 consecutive quarters to see what's happening. What you want to do is you want to see that EPS being positive and increasing quarter over quarter. And number 2, you want to look at that earnings report and make sure they're beating the earnings estimates. If stocks are doing that for 4 quarters in a row, then it may be a wise investment. Otherwise, don't touch it. So I do not recommend IPO stocks. Right. Number 5, new crypto exchanges. Now this falls into the category, in most cases, you can't invest in them, but it has been a situation where I would be paid to promote new exchanges. We saw that issue with celebrities and athletes promoting that FTX exchange. We all saw what happened there. Is in most cases, those types of businesses, they're not held up or they're not operating from revenue. They're operating from venture capital dollars or bank loans. And that's not a stable business. When I invest in a business, I want to know it's money. The money in the business is generated from revenue, not from investments from venture capital firms, because they're the ones propping up the business so it can stay operational. Those VCs stop the funding. That business isn't generating enough revenue. Guess what? That business goes out of business and your money can be lost. I know there are some insurance policies that can be put in place, but be very careful. I do not invest in new crypto exchanges. I avoid them like the plague. And when they approach me to promote to you and I get paid to do that, I say no. I would not feel right doing that. Again, that's unethical. All right, moving on to number 6. This is very similar, which is new stock exchanges. There's new stock exchanges coming out all the time. And let me tell you this, the world needs another stock exchange like we all need another hole in the head. In other words, we don't need another stock exchange. Well, what these stock exchanges are doing is they create incentives like join us to get $100 in free trades or $500 in free trades or $1,000 or whatever it is. Same situation as the crypto exchanges. They're not propped up from revenue. They're propped up. They're operating based on venture capital dollars and bank loans. It's not a stable business. Again, if the VC dollars and the bank loans cut off, how is the business going to continue to sustain? And if it can't, it shuts down and you lose your money. So I know people out there are creating a new exchange. They're not going to like this video, but that's the honest truth. I want to make sure your money is kept safe. Moving on to number 7, crypto. So I no longer invest in crypto. It's not a sure thing. It's too volatile. You can't calculate where it's going. I know some people think they can. They're unlike a stock. There's no income statement, cash flow statement, and balance sheet. With stocks, we have that historical data so we can calculate where stocks are going, and with high probability, high certainty, we know we can make money, especially over the long term. With crypto, you can ride up the wave and feel like you're a genius, but when that rug gets pulled out, when that crypto coin falls off a cliff, it's when everybody loses money and you get a lot of upset people. So I do not invest in it, nor do I promote. I have not been approached to promote crypto coins to you, but I know that day is coming and I'm going to tell them right away, nope, I do not feel comfortable promoting that product to my audience. It's not safe. All right, number 8, whole life insurance. I have term life insurance, which is significantly less expensive. And if something were to happen to me, my wife would get the death benefit. But whole life insurance, I don't like it because it's treated like an investment vehicle. But as I talked about in another video, the returns don't keep up with the S&P 500. So that's why I recommend if you want something safe, just go invest in the S&P 500. And if you want life insurance, just go with term life, significantly less expensive, great benefit, you're in a good spot. All right, moving on to number 9, annuities. I don't love annuities because you are giving up the money to the institution, the financial institution, and they pay you a fixed fee every 6 months or every year, typically. And rewinding that, reversing that is pretty hard to do. Now, I'm not a financial advisor. If you work with an advisor, they highly recommend an annuity. Sure, follow their advice, but ask questions, see what other options you have. An alternative to that, because I don't like the idea of giving that money or my money to somebody else and then they're paying me a fixed amount. I like the idea of keeping my money and I get to choose what I invest in. And if I want to, I can sell it for liquidity or I can get the cash right away. That's why I really like stocks. And as a great alternative, you want something a little safer, I go with like an index fund or ETF. Again, I mentioned the S&P 500. So again, only move forward with annuities if your advisor recommends it. All right, number 10, bonds. So your advisor may recommend bonds. Similar to the annuities situation is I would ask questions. What other options do you have? What else can you invest in? Because I don't like the idea of giving your money or putting your money into something and it's fixed, like a fixed rate of return, because typically that rate of return doesn't even keep up with the S&P 500. If you want to play things safe, I tell people keep it simple. You can go into an index fund or ETF. Again, S&P 500 it's a good option. Again, not a financial advisor, but that's what I like. So I don't like bonds for that reason. Doesn't even keep up with the market. So overall, those are the 10 investments I do not invest in and I do not promote. And as Tykr is growing and as the YouTube channel is growing, I'm starting to get approached by more of these organizations, and I have to turn down the payments they're willing to send to us to promote it, because I can't promote a junk product that's not going to make you any money. So just keep that in mind. Send this video to a friend or family member that's thinking about one of these 10 things. Again, highly recommend you look at other options. Of course, I recommend Tykr. It will help you find some strong stocks. You have control of your money. You can make great returns on your own. It's not too difficult. All right, I hope this video helps. If there's anything else on the list that you avoid, I'd love to hear from you. Go ahead and comment down below. If you like this video, please hit that like button. And if you want to see more like it, please hit that subscribe button. And of course, if you want to buy and sell stocks on your own with confidence, I invite you to join Tykr for free. All right, we'll see you in the next video. Bye for now.